So you guys are officially running me ragged, but I wouldn't have it any other way, guys. I promised you that I'd do every single one of the community requests at the weekend, so it's going to be a bit of a marathon altcoin request. Looks like it's going to be more of a DGen marathon altcoin request. And then firstly, before we get into this, a big thank you to the new 1,000 subscribers. But from me to you guys, I just want to be open and honest. If you're a perma bull, if you think that there's going to be a super cycle, and if you're a flat out DGen, this channel's probably not going to be for you, because I'm going to be teaching risk management techniques. I'm not going to be giving calls on cryptocurrencies, but I'm going to be helping every single person in this community understand how to read a price chart themselves, how to understand what's fair value, and we can discuss it amongst ourselves within one community that have got shared goals. So if you think that you're going to have a super cycle and last for 2 years, 3 years, 4 years going into the next bull run, unfortunately, guys, this is probably not going to be the community for you. I want to ride this bull market, and I want to ride this bull market with the highest probability of success. And once I've scaled out of this bull market, I want to be scaling into a new bull market for when crypto's going in a bear market. If you're intrigued by that, guys, look at my exit plan. It's full and transparent, and that's why a lot of the people have come into this community. But I just want to be open and honest with you guys. I'm not going to be a DGen. I'm not going to be flat out putting 100% of everything, expecting it to go to the moon. I'm not going to be gambling, and I'm going to be scaling out. And this is one question that I ask myself, and this is one question that I want you guys to ask yourself. If you had $10, or if you had $1,000, say, that $1,000 went to $10,000, and then you've got a thought in your head: I want to sell, I want to sell, I want to sell. But what if it goes up tomorrow? What if it goes up tomorrow? That's the thought that you have when something's run so hard. You think it's going to go up tomorrow until it doesn't go up tomorrow and it goes right down. So think to yourself, guys, that one question. If you had $1,000 and that $1,000 went to 10,000, you took that 10,000 out, would you be happy if that $10,000 went to 15,000 the next day? Or would you want to put that money back into the market to try and get to $20,000? Guys, in this community, you're happy with what you've got, you're happy with what the market gives you, and you live to fight another day. So, what a rant again, guys, off kilt. Let's dive into the biggest altcoin show that I've done so far. Okay, one thing that we're going to do before we jump into the altcoins, guys, we're going to look at the bigger picture. This is time frame analysis. I get lots of questions. Why don't you go into the 10-minute chart? Why don't you go into the 20-minute chart? If I show people the 10-minute chart, the 20-minute chart, the 30-minute chart, the 40-minute chart, the 1 hour chart, the 4 hour chart, if I showed you all of those charts with all of those different mindsets, it would be a recipe for disaster. Our community couldn't come together because we'd all be thinking different time frames, different thesis. In fact, guys, let me show you. So this is the weekly on Bitcoin dominance. What can you see? Bullish, higher highs, higher lows. This is the 3-day. What can you see? Just had a bit of a bearish pattern. We've took out the previous higher low. That means that we're indicating that we're flipping bearish. That's the 3-day chart. What about the daily chart? You can see we've just dropped the 200 daily moving average. We just dropped this support shelf, major bearish. What about the 12-hour? You can see even more bearish. What about when you go into the 30-minute? What about when you go into the 30-minute? Completely bearish. Top left, bottom right, lower lows, lower highs. What happens when you go into the 15-minute? It's all the same chart, guys. It's all the same price. It's all the same data. 15-minute chart, 5-minute chart, 3-minute chart. Right, so you've got 7,000 people. I've got 7,000 people within the community. That's 7,000 different mindsets. So if I'm talking about the 3-minute chart, the 5-minute chart, the 15-minute chart, the 30-minute chart, across all 7,000 different peoples, it's going to be a recipe for disaster. If one of the community members tries talking to the other community member, the chances are they're both talking about different time frames. So that's why I don't delve too much into the lower time frames, guys. Once we start understanding price charts, once we start trading, once we start understanding protection, stop losses, strategies, then I'm happy to go in and out on the shorter time frame. But you need to confirm to me, guys, that you fully understand this, because I'm all about teaching you how to read a price chart, because understanding what's fair value on a price chart is going to be one of the best self-development techniques that you're ever going to learn in your life, trust me. So different time frames, guys. We're starting off on the weekly, and I've been vocal on this channel how I expect Altseason to play out. Now, is it going to play out like this? The chances are, guys, it's not going to play out like this. All I can do is look at past data to find out what happened on the last Altseason, to find out exactly how this one could potentially play out. It's not an exact science. So what it's going to do is it's going to give me an indication for time in the market. That's what I want to know. How much time have I got in the market? That's going to indicate how much I need to scale out and what percentages of what period of time. So the first thing that I look at is Bitcoin dominance, and go back and watch the video on how I expect Altseason to play out, because I think that what will happen is, I'd said that we'd get rejected at 60%. I had a conviction that we got rejected at 60%. Benjamin Cohen was saying 60%. Lots of people were saying 60%. And it was a major level of previous support, which is flip resistance. You'd expect 60% to be a major sticking point. So fair play to him. 3 years, he's been saying 60%. He was completely right. And then we started getting the rejection. So remember, guys, time frame analysis. This is taken 3 weeks to play out. These 3 candles are taken 3 weeks to play out. And how I expect Altseason to happen is a surge to the downside with your peaks and your troughs down to this 200 weekly moving average. Now, remember, guys, the higher the time frame, the higher the conviction, the more eyes that are on the charts, the more eyes that are on the charts, the more buy orders, the more sell orders, the more buy orders and the more sell orders, the more sticking points at those levels. So there's lots of people looking at this 200 moving average, but it's not just the 200 weekly moving average. Look at this: resistance, 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 resistance. So I expect this to be the sticking point and the midway of Altseason. And if we look before at what happened, guys, we got this here. You got the 200 weekly moving average, and this was your sticking point. This was your sticking point. That sticking point lasted for about 7 or 8 weeks, guys. So if this happens at 7, 8 weeks, you'll start seeing Bitcoin start outperforming slightly against the dominance, and then the choppiness happen between the rotation while there's indecision before you get a second surge of Altseason. Where's that likely to come? These lows here, around about the 39 to the 40% level. So that's what I'm expecting for Altseason, guys, and that's going to indicate time in the market for me. And the next thing that I'm going to look at, which is a little bit different to what other people say, is how I'm confirming Altseason, how I'm giving myself a time frame for Altseason, because people are saying now, and there's lots of different measures, guys. It doesn't mean that they're wrong, doesn't mean that I'm wrong, doesn't mean that I'm right. This is just what I'm looking at to try and indicate how long I've got in the market for Altseason. So a lot of people are saying we've been in Altseason for 20 days, 15 days, you've got 88 days for Altseason. But what I look at for Altseason is this. So you take out Bitcoin and you take out Ethereum, 2 front runners in the market. You've got Bitcoin and you've got Ethereum. You take out of those 2 and you've got this left, total 3. So this is the total market cap, excluding Bitcoin and excluding Ethereum. And this is what I'm measuring for Altseason. This is what I'm measuring for time in the market, is this break here. This is where it all happened. This is your previous all-time high of 2017. So around about this point here, Bitcoin had just put in all-time highs of 20,000, and the alt market had put in 357.16 billion combined, excluding Bitcoin and excluding Ethereum. This break here is a significant break for me. We're going to zoom into this very shortly. So this break here is going to signal the Altseason surge for me, and it's going to indicate how long it's going to take from this candle to the top of here, a rough idea of how many weeks that it's going to last. That's saying 13 weeks. Now, I'm conservative. I'm going to take a few weeks off that, and I'm going to ensure that I'm going to be scaling small amounts during the start of Altseason, and those amounts are going to be increased as far as percentages are concerned towards the end of Altseason. I want about 20% left in for Euphoria, 15% left in for Euphoria. If I lose that 15%, I lose it, guys, as long as I've banked along the way. So all I'm doing is looking for timeframes, guys. What's interesting to see is you can see on this total 3 chart now, you can see we're trying to break out all-time highs. So although everyone's saying we're in Altseason now, we've got 88 days from now, this is what I'm looking at, guys. I want to see how we break and how we react from the new all-time highs of total 3. And the next thing that's interesting, and this is something that'll play with your mind emotionally, if you just look at this last one, this is where we confirmed the break and the high, and that went to its extreme high of the candle. That's the top of the candle wick. That was an insertion within the altcoin market of 101.7 billion. So on that one candle, when you put in a new all-time, 101.7 billion. Now, this is the next week. Remember, the weekly candle, the following week, what happened? We got to the extreme low, 157.2 billion taken out of the crypto market. So when people are looking at this, and you can see you've put in an all-time high on the total 3, people are thinking, this is it, this is Altseason, we're going to the moon. The week after, they tricked them. All the liquidity that put in the previous week on the all-time high, all that liquidity got sucked out the next week. And what happened, guys? RS flip. Resistance flipped support. So whilst this shook everybody out and took out all the liquidity from the previous week and made people scared and made people sell and made people undecided, what happened? Flipped support, and then you got your alt season, which lasted, remember, 11 weeks. So I digress, guys. I digress. So it's just giving me an example of an indication of how I can play my exit strategy, what kind of percentages I need to take out during what portions of the bull market, what portions during alt season. Because when I sell 5% or 10%, I'll be selling 5% or 10% against the market. So the chances are that that 5% or that 10% that I'm taking out is going to keep running and keep running. And that's the idea of keeping skin in the game, but making sure that you're banking profits along the way. Right, okay, let's jump into the altcoin request. That was a long-winded way of getting to these, so I've got lots to talk about. Let's jump in now. Right, okay, guys, full disclaimer, I haven't got a clue what half of this crap is. I shouldn't say crap, actually, because I don't know fundamentally what it is. I haven't researched the projects is what I mean. So I've only got what you've given me, and I can only give you my perspective from a technical analyst perspective. And unfortunately, we're starting with Mudang. Mudang's got barely any data to go by. One thing, guys, if you're new to crypto and you're looking at charts, one thing that you can do is understand what market that you're buying it from. So this is the Binance Mudang against USDT. If you had a Mexi account, you'd be going Mudang, USDT, Mexi. The prices are slightly different. The prices are slightly different in each exchange. The liquidity is slightly different in each exchange. The more liquidity that's into the exchange, the more the price stabilizes. So if you've got a high risk exchange that's got low liquidity of a high risk token, that means the volatility will be so extreme. You need to be so careful, guys. Make sure the exchange that you're buying from, or wherever it is that you're buying from, has got strong liquidity if you're actually trading that thing. And if you're trading it on leverage, guys, definitely make sure it's got big liquidity, because that little swing to the upside or a little swing to the downside, that's you liquidated. So Mudang, guys, there's not much you can do here, to be fair. We can stick a Fibonacci on here. There's no data to go by. This is a technical analyst's nightmare. You see it can come down. We've hit the 618. Let's have a look. Can we do our strategy? We can't do the strategy. We can't do the bullseye strategy because we need one metric. That is the 200 daily moving average, because that indicates whether we're bullish or whether we're bearish. And that indicates whether you go from step one, which is, are you above the moving average? Are you below the moving average? On to step two is, when you've put in a new high, you're putting a Fibonacci from the low, pulling back to the 618. Then you're looking at your stochastic, making sure that's oversold. You're adding your trend line, you're waiting for the break, and then you want a 2-to-1 risk to reward. Might sound difficult, guys. That's one of the most simple strategies that I've developed for the community, and I'm going to drill it and drill it and drill it and drill it, and it's going to teach you rules. It's going to teach you to understand when you can take something, when you can't take something, and what's the least amount of capital that you can risk with the most amount of gains. So remember, guys, it's educational, not financial advice. So it's hit the 618. We could stick a trend line on there. It's not a very good trend line, guys. It's not a very good trend line, because you've got one wick to the upside, which was extreme, which broken. The second wick to the upside, which is extreme, which is broken. That's not an actual trend line. You can't call that a trend line. So I wouldn't take that, guys. I'm not interested whatsoever. Maybe if you come back down to this 786 and hold this support here, I could scale a little bit. If I was doing $25, $10, something like that, I'd scale in a little bit. But the thing is, what you've got to realize, when you've got limited amount of data like this, the price can give you a bit of a skewered take. So what I've got here is, this is the fixed range volume profile. This is going to give me the sticking point of price action. So I'm going to take it from the bottom to the top. And look, guys, this is what I mean. So this is like false information. This is the actual sticking point. This is the main sticking point between all of this price action as to where price is likely to retrace. And that's all the way at 21,511. So if that's the case, and if price dropped and taken out this previous low here and this build up of price action, this is where it's likely to come down. And from where price action is now, that's a drop of 55%. So you're just getting into crypto, you're just getting into Mudang. You've just heard an influencer say Mudang is going to go to the moon. So you've just put your $1,000 savings that you've just took out of somewhere more secure. You put your $1,000 into Mudang, and Mudang's just dropped 55%. Your $1,000 has gone to 45%. What would you do then if you'd lost $550 out of your $1,000 that you've just invested in crypto? You'd probably try and win it back. And if you're going to try and win it back, you'd have no confidence in this Mudang. It's just lost you all that money. So you're going to go and you're going to look for something that's pumped. And you're going to look for something that's pumped, and you're going to put your $450 into that something that's pumped. Guess what, guys? What goes up must come down. that thing that's pumped would need to retrace. So that's the rotation of death. And I talked about that in the last video. Go and watch it and don't fall for it, guys. You don't buy things, you don't sell things that haven't pumped and then buy things that have pumped. The thing that has pumped needs to retrace. When the thing that pumps needs to retrace, if you've put your money in at the pump, then you're going to lose your capital. If you lose your capital, then you've got less to fight for another day. If you've got less to fight for another day, you can't play the other bull run. Right, okay, guys, sorry, man, I keep going off track. Right, ICP next. Okay, ICP. So we've had the big break. We had this long accumulation phase, and you had the big break here. So this is significant. We've broken the 200 daily moving average, and then the traffic light systems come into play. Anyone that's new to the channel, what is the traffic light system? It's the 200 period moving average at the bottom. It's the 50 period moving average in the middle. And then it's when the 20 period moving average crosses over, creating your traffic light system. Green at the bottom, then you've got yellow in the middle, and you've got red at the top. We just go back and look at what happens previous times when you get this kind of crossover. Look, green at the bottom, yellow, and then red at the top. It's an easy way to indicate whether you're in a bullish move, when you're in a bearish move. When price action is above all of those three trend lines, all of those three moving averages, and all of those three moving averages are all flat, fanning up, that's giving you a high probability that you're bullish and you're looking for pullbacks. When you're looking for pullbacks, how far are you looking for pullbacks? That's where the trusty Fibonacci comes in. So from this swing here, guys, all the way to where price action is now, if this is the high, I'm looking for a 618. And if I'm looking for a 618, I'm looking for other conditions to be met as well. So what are the other conditions? Let's go through the strategy together. I want a 618 pullback if this is the high. We don't know it's the high yet. We could put in another high. If we do put in another high, we get our Fibonacci, we stick it to the high, and then we wait for the 618 at that level. So we don't know until the high is confirmed. But once we start pulling back, once we start doing this, first area we're looking for is the 61.8, which coincides with this previous resistance where prices tried to spike up. So we know that that could potentially be a sticking point. You've got previous confluence, you've got the RS flip. We want that to hold support. That's sat at $12.82. So if you look here, guys, you've got this shelf. You've got this shelf to go by here as well, which acted as support, 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 support. So we've got a strong support base sitting at this area, and I'd be waiting for price to pull back, price to pull back. As price is pulling back, we want the stochastic RSI to pull back. We want that to indicate that we're in an oversold region, below the 30, guys, oversold. And we want a higher low on the chart. Once this comes back to oversold, we want a higher low at the chart. We want to be holding the 618. What happens if this happens, guys? You get spike down, hit the 786, and then you get the spike up within the same candle, back to the 618, completely fine. Absolutely completely fine. So you get your pullback, you get your pullback, you get your pullback, you come to oversold, you add in your trend line, reacted at the 618, then you're waiting for the next thing. You're waiting for the break. Once you've got the break, you need a minimum of 2 to 1 risk to reward. So you need a minimum of 2 to 1 risk to reward, guys. What does that look like? If you were shooting for the previous high, which is part of the strategy, then you're protecting yourself below the previous low. If that was the low there, guys, and you're protecting yourself there, that means one thing: you can't take it. You can't get a 2 to 1 risk to reward, because this strategy was shooting for the previous high. Because you're shooting for the previous high, it means one thing: you're following and you're not continuing. We're not expecting to put in new highs and then continue to the upside. It's been more conservative, and we're shooting for previous highs. It's got a higher probability of in, out, and a higher probability of success. So it all depends, guys, if you can get the 2 to 1 risk to reward. If you hold this 618, this comes back down to oversold, and then you get the break, and then you get a 2 to 1 risk to reward. You protect yourself below the low. That's what I'd be looking for on ICP from a trading perspective. Got to remember, guys, from an investment perspective, I was quite vocal on the channel about the BULLSEYE portfolio, and that's why I took the opportunity during the build phase window to start putting $50, $50, $50, $50. And I didn't want to put all of my capital in. I didn't want to put lots of my capital in, because a lot of people haven't got that kind of capital. And I wanted to show everybody in YouTube, so I've done it full and transparent, what $50 here, what $50 there can actually do to a portfolio during a crypto bull run. So I'd started, guys, and I was probably showing this portfolio more when it was in a loss. And when it was in a loss, nobody was interested. But one thing that I knew in my head it had to be in a loss because I was scaling my entries down and scaling my entries down. And I got rules built in where I could only scale down and I couldn't scale up. So it got to a point where I was scaling down. I had to be in a loss. I had to be in a loss. I had to be in a loss. And I was showing everyone on YouTube, every single one of these coins, guys. I did a video on YouTube saying that I'd bought $50 worth at the time. So this is how it looks at the moment: 6,587, up 209.38 on the day, up 3,747 overall, 82.5% so far near the start of alt season. Okay, what's this one called? Velo. Right, okay, something significant's happened on here. Guys, forgive me, I haven't been through the charts already on these. I'm just doing it literally as I'm looking. So, right, okay, one thing that you can see on this, guys, we're looking at an RS flip. We're looking at an RS flip, and we're looking at an RS flip that's happening right now. We need one condition to be met here. We need this to hold support by the end of the day. By the candle close, we need the bears to have not pushed price below 0.028686. So, let's have a look. If we stick a fib on here, is there any sticking points from this low? Because this is the thing, when something's run so hard, we need some kind of a retracement and we need some kind of a signal that we're going to get a continuation. And you can see that this potentially, guys, could trace back. Yes, we've got an RS flip. Yes, we're testing the previous resistance. And yes, it's currently flipping support at the moment. However, what do I say about gaps, guys? When you've got gaps like this and a lack of a build up of price action, you'd expect what goes up that fast to come down that fast because of the lack up of build up of price action like this here, like this here. You expect these areas when they come back to flip support or resistance, depending on what side that they're on. So we're holding support at the moment, guys. It's not a strong support, and we could potentially pull back. The areas that you're potentially pulling back to, guys, is the 382 and the 618. So let's have a look, see what that would look like. If you pull back to the 382, holding the 382, get that on, you're holding the 382. What does that look like? If we just pull out, clues look left, guys, clues look left. And then what we're going to do is on the 382, we're going to stick that on here and see if we've got any confluence that's going to add weight to our move to give us an idea that that's going to hold as a strong support. We've got a little bit of a build of a price action. You can see here, resistance, resistance, before we started pulling back. So the 382 could be a sticking point, and the 382 usually indicates that something's in a strong trend. So we can look at the RSI, and you can see the RSI, guys, this needs to cool down. So this is going to give us an indication of what Fibonacci sticking point this is going to hit and what it's going to react from. If the RSI comes all the way down here, when this comes to the 382 and it holds the 382, you start seeing a couple of candles forming on the 382. That's indicating that it's starting to form some kind of a support, and then you've got a high probability of moving to the upside. However, the 618, if it comes back down to this 618, guys, remember, clues look left. The more sticking points that you have in the market, the more chance that you've got of having a reaction. So if we do exactly the same and we put the 618 on there, look at this. Look at this, guys. These Fibonacci numbers: once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times, 9 times, 10 times. It's been rejected 10 times. This has got a strong possibility of flipping support when that comes back down to hit it, if it comes back down to hit it. So how would I play this Velo move? Would I be interested at 382? Definitely not. Would I be interested in the 618? Yes. Why would I be interested in the 618? Because at the 618, that allows me to shoot for the extreme high, and that allows me to protect myself with a tight stop loss. That gives me a 7.65 risk to reward. What does the 382 give me? 1.06. There's a strong probability that we come back down and test this previous resistance that's hit resistance 10 times to act as that support barrier. We want it to come back down. We want it to hit support. We want it to act as support, and that's going to be a support base going forward. So what I'm saying, guys, is time the market. Time the market. If it doesn't happen, it doesn't happen. There's tens of thousands of cryptocurrencies. You look at all these different chart patterns. Some of them are going to play out. Some of them are not going to play out. That's why you shouldn't fall for the rotation of death. That's why you shouldn't buy pumps and sell things that haven't pumped, because that's what's going to mess with your mindset. You're always going to be chasing your tail, always going to be trying to get them gains, and you're always trying to be making that money. Whereas if you preserve your capital in the first place, guys, this is your loss. Price is going to go lower. You're going to get price cheaper, a lot cheaper. You've stopped out here. You've got all your capital when you're down here. If it went down there, you've got all your capital. You stopped out with the limited amount, and you can then get it at 0.008229 as an example. So, guys, make sure that you protect yourself. That's Velo. Dot. gosh, dot's run, hasn't it, guys? I'd said once this breakout was going to be significant. We got the breakout. Let's get this chart up. Got the breakout, got the retest, and then got the trade. And this move here so far, since the last dot video, so far it's moved 205% to the upside. You can see we've got a sticking point here. Let me just get rid of this. You can see we've got a sticking point here. This is going to be this previous high. So this is going to be the barrier that we need to overcome. Are we overbought? Are we oversold? Let's have a look. We're coming back into the oversold territory. So we're starting to form the right way. We want to be coming back down here, guys, coming back down here, seeing how far we retrace. So we'll stick a Fibonacci tool on there from its swing low. And we're looking for these sticking points. So 382, if we look at the 382, clues look left, 382, what have we got, guys? We've got this sticking point here. We've got that as support. However, we go down to the 618, exactly the same again, guys. We've got stronger support at the 618. One thing that you can look at and tell from this dot move here, have we got a divergence actually? Let's have a look. Got a little bit of a divergence. So you can see from this high here, you put in a lower high, whereas on price, you've put in a higher high. So that's indicating you've got a divergence. That indicates that you need to pull back. Where's the first level that you're likely to pull back to? It's going to be the start of this channel. It's going to be the 0.5, and that's going to be sat at $7.65. So $7.65 is probably going to be the area that this is going to reject to. We can tell that this needs to retrace at some point because it's in an ascending channel. This is signaling, it signals exhaustion. So this signals strength by the bulls, and this signals that the bulls have got strength, but it's exhausting, and it's cooling off. This is where the bears are starting to put sell orders in here, here, and here. Not doing it here, they're not doing it here. So that's how you can tell from chart patterns, guys, who's got advantage between the bulls and the bears, what needs to happen, how far you need to pull back, will you pull back, what happens if you don't take the trade, can you get a good risk to reward? It's all questions that you need to be asking yourself. And if you are new to crypto, guys, I've had lots of people in the comments saying, I've just bought these 3 coins. I won't say what the coins are, but I've just bought these 3 coins. And you look at them, they're like meme coins, high-risk meme coins, high-risk DGen coins. And you think to yourself, hope you haven't put much in there because they can go to zero. They can mess you up with your mind. They can literally completely fail, or they can drop 60, 70, 80% overnight. So do your research, guys. If you're looking for cryptocurrencies, go into the crypto bubbles, because I'm not going to give you any, and I'm not going to tell you to buy any. Go into the crypto bubbles. Look at the top 100. This is the top 100, guys, by market cap. You can look at 100 to 200. You can look at 200 to 300. You can look at 300 to 400. Use this as your risk factor. The closer it is to 1, the less risk it is. The higher it is to 1,000, the more risk it is. So the more that the risky it is, the less capital that you want to be risking, because that's the highest probability that that thing is going to go to zero. So look at the top 100. If you're new to crypto, look at the top 100. If you're really new to crypto, look at the top 5. And remember, guys, even the top 5 are speculative assets in a volatile world. Right, okay, back to it. So you're creating a flag here, guys. You can play this 2 ways. So you've got a flag here. You're creating a bull flag. Now, this is different to the previous trades, because what I'm saying with the previous trades is it was trend following. Now, I differentiate trend following and trend continuation as follows. If I'm doing something like this, pulling back and trying to shoot for the previous swing high, I'm saying that that's trend following. When I'm doing something like this, I'm breaking out from a bull pennant, that's a trend continuation. So you're expecting price to put in new highs at this point. So you're not shooting for the previous high, you're expecting to put in new highs. So these ones, guys, if you play them right, they can be really good and they have got high probabilities. However, you need to be thinking about your risk to reward a hell of a lot more. And to do that, in instances like this, when you've broken all-time high and you're in price discovery on something like Destra Network, that's DSYNC, when you're in something high risk like this, the only thing that you can do is look for extensions. We go to our trusty Fibonacci. So I'm going to go from the swing low to this swing high and then look for this pivot swing. And I'm looking for extension levels as to what I'm going to get a reaction from, guys. And I'm looking for clues. One clue is that I want wave 3 to be bigger than wave 1. And if wave 3 is bigger than wave 1, there's a strong possibility that we're going to get a pullback in wave 4. That's going to be a higher low, and then you're going to get a continuation of wave 5. So first things first, guys, 1272. So this is the first swing. And I'm not an expert, guys, in Elliott wave. This is the first swing. This is your pullback swing. And this is your second swing. One thing that you can see here, guys, is the second swing is an extension of the first swing, and it's hitting the 1272, and it's reacting once, twice, 3, 4. So we had no projections to go by. We'd put in all-time highs. We've got no data to go by. However, by just doing that one simple move, we can understand that we're at a strong resistance level because we've hit the 1272 extension. So it's likely to pull back. How far is it likely to pull back to? Retracement from this low to the high. We're looking for the 618 to coincide with the previous build-up of price action, which it does. The golden 618 is sitting at 0.3565. So if I wanted to take this, I would want that to pull back to 0.3565. That coincides with this previous local high. So that's going to be my support base. That's going to allow me to have a short protection. Then you can even take the bullseye strategy if that happens, because what does it give? It gives opportunity for the pullback, hold here, limited amount of risk, get your 2-to-1 risk to reward. Or if you think it's going to continue, you can put it up there and continue it. It depends what type of trader you are, guys. Are you a trend following trader? Are you a trend reversal trader? Trend continuation trader? Support and resistance? Swing trader? Day trader? Whatever suits you, guys. That's one thing that you're going to need to work out yourself if it's something you're doing. And what I would highly recommend is you don't put any of your own capital in if you're physically trading. You can look at trading charts, guys, and you can understand that what's happened before, and then you can look at that thing that's happened before, and you can build yourself a rule set. And once you build yourself a rule set, that gives you another edge, because you can start back testing to find out how many times that thing's happened before and get a percentage of how well it works for that strategy on what time frame. Because you can have a super strategy, guys, on the 8-hour time frame, and that super strategy, you apply it to a 4-hour time frame and it might not work. And that's why it's important to go through and back test the data. And if you're back testing data, you can get an idea of how much you can gain before you've opened the doors of your trading journey. So my teacher always taught me, you go and open a shop, guys. You've got to go and buy the shop. You've got to put the rent up front. You've got to go and buy the stock. You don't know how much you're going to make. You don't know what the location's like. You can't do any pre-research. You open your shop. You either do well, you don't do well. You either be successful or you fail. With trading, if you do it properly, guys, don't put all your eggs in one basket. You don't put your own capital in when you're learning. You can learn without putting your own capital in, guys. You can paper trade. You can just not even put money in at all. But one thing that you can do is you can understand how much that you can generate before you open the doors. Now, what other business gives you that, guys? You can understand, I can get 5% a month. I can get 6% a month. I can get 40% a month. Depends what type of trader you are. Depends how often you go to the charts. Depends what kind of conviction you've got. But one thing is, you can understand by back testing your strategy once you've created it, how much that you can earn at any point, and give you that edge as to how much you're going to get before you open the doors of trading. So sorry about that. Digressed again. Right. Okay. Desync. We've got pin next. So this is what pin token on Binance Smart Chain Pancake Swap. Don't like this, guys. It looks like it's low liquidity. That's something that I wouldn't be taking. So you've got a shelf here to overcome, $3.368. We don't know how far this thing's going to go down. You've got the bottom base here, which is its bear market low, sitting at 0.445. That was going back to November 2022. Guys, I don't like that thing. It looks too volatile to me. I don't know what it is. That's something that I wouldn't be interested in. OXO, don't know what this is either, but it's looking quite nice, actually. So you can see this previous buildup of resistance. This is going to be our resistance point here that we need to overcome. What you're looking for on here is an RS flip, because you don't buy resistance, but you can buy support. And if you're buying support, which was previous resistance, guess what, guys? It's a lot of the time exactly the same area. This is your resistance. That's your resistance. Once you flip through, let's build that in again. That's your resistance. Once you flip through and hit support, guess what, guys? What's this level here? 38. What's this level here? 38. What's this? Resistance. What's chances of happening at resistance? Pullback. So if you flipped support, that's giving you a higher conviction. That's giving you a higher low. That's giving you a higher probability than buying any resistance, guys. You buy resistance, you're buying into something that's buying into weakness. You're buying into weakness, you've got a higher probability of pulling back. So support, guys, support, support, support. Always give yourself that edge. You can go through and you can add additional measures to any strategy, to any filters to give yourself that additional edge. More filters that you add to your strategy, the less times it plays out. However, you get a higher win rate. But one thing you need to think about, guys, when you're in a bull market, you've got a short period. When you're in an alt season, you've got an even shorter period. So the more rules that you build into your strategy, the more rules that you have in there, that means the less trades that you're taking. That means the less times that you can take advantage of something as short as an alt season. So OXO's got to retrace. Where's it got to retrace? Probably the 618. This 618 looks like it's probably going to coincide with this previous build-up of resistance. Let's have a look. Yeah, so you've got this previous build-up of resistance here. You've got this rejection point here. You've got this rejection point here, and you've got a bit of a zone here. So if we just build in this zone, that can be your support zone. You can see rejected once, twice, 3 times, nearly 4 times. We're expecting this area to come back down and flip support. So if it comes back down and flips support, what do we need next, guys? Let's go through the process. This comes down and flips support. This comes back down to the 618. You bring up your stochastic RSI. You need stochastic RSI to give you a clue. What's the over clue that we are over? What's the clue, guys? Oversold. We're oversold when we're at support. We're oversold when we've put in a higher low. That's given us additional conviction. Got this previous build up of price action, which was resistance, which would flip support. Then you can add your trend line on there. Then you can wait for the break, subject to minimum 2 to 1 risk to reward. Preservation of capital. You can preserve your capital below the 618. I'm going to shoot through these a little bit quicker now, guys. Right, we've got render next. You can see render testing. This build up a price action here. This is a major resistance, guys, that we need to overcome on render. This major build up of resistance starts at $9.80, and the top end you've got $11.35, and then you've got the local highs here as well, guys, to contend with. So be careful with render. What kind of a pullback would we get? 618 pullback looks like it would coincide with this previous Lux algo support. If we just check that, 618, yeah, exactly. So there's not many calls on this video today, guys. It's because the market's pumped. And that's when people want to buy. That's when everybody wants to be buying, when the market's pumped. So do you want to be buying into this resistance? Do you want to be buying into this resistance when you can pull back here, get the 618, which is going to be from where price is now, 36% cheaper. Just be patient with your entries, guys. GigaChad. What the hell is GigaChad? What the hell is GigaChad? Right, okay, guys. This one actually looks like, if you look at this, it's limited amount of data, so it's going to be more of a high-risk degen play. But if we look at what's playing out here, looks like this is going to be a higher low and a continuation. So we need to take out this previous high, 0.0783. And how far are we from that high, from where price action is now? 36% to the upside. That's something that I'm going to be waiting to play out, guys. I'd rather flip this resistance as support and get that next leg up rather than playing anything here. You see, the thing is with these guys, and it happens with me time and time again, because I'm not a guru, just someone that looks at charts, someone that can understand charts, and someone that gets things wrong as well. What I mean by getting things wrong, guys, on my channel over the past few weeks, I've been saying to people, I'd be waiting for a pullback. I'd be waiting for a pullback. These things that have pumped, I need a pullback. Otherwise, I can't get the right risk management. And a lot of the times, guys, the things have just continued to run. They will get a pullback at some point, and it will get an entry at some point, but the things have just run. So I'm saying if it pulls back, then I'm interested at 618. Then I can apply my other conditions for my strategy. Then I know exactly what my rules are. I can protect myself. And then more importantly, I can sleep at night, guys. Once you've got stop losses in, you can sleep at night. That's the main thing. You're not going to be waking up in the middle of the night wondering how your trades get done. You're not going to be waking up the next morning looking at the chart, find out if you're in a loss, if you're in a profit, how it did overnight. You're going to know exactly you're going to be in, you're going to be out. If you're going to be out, it's not going to hurt you too much because it's a limited amount of capital. So Giga, I'll be waiting on that one, guys. Okay, and Chainlink next. Sorry, guys, I've had to break the video up a little bit. I've got such a short attention span. I need to have a break every now and then. Okay, so actually, before we get into Chainlink, we've got Cybro. One of the requests from the community was Cybro. And I thought that this would be a good idea to show you guys exactly When something's not on trading view, when something hasn't got a trading pair against the dollar, the only place that you can get it is on a decentralized exchange, using a decentralized wallet. So you'll see that Cybro is on the Solana network, and the only trading pair at the moment is Cybro trading against Sol. So it's how well this is performing, not against the dollar, but how it's performing against Solana. This is the 4-hour chart, and you can see it's not performing too good. Something that I'm not interested in, guys. It doesn't mean that it's not going to outperform Solana going forward. It means that for some reason, this red candle is showing me that there's a bit of danger in the market. There's a lot of selling in the market. There's a lot of selling pressure. And it's something that I'm not interested in. When I've got a limited amount of data to go by, guys, it's something that I'm not interested in. I don't know what it is. I don't know what I'm buying. Why would I risk my capital? Right, Chainlink next. We can look at Chainlink and you can see a few different areas here. First thing that I'm going to do on Chainlink is, where is this exhaustion point going to be? Because ultimately I'm looking for pullbacks. What I'm going to do is I'm going to use a fib extension from this low here to its swing high. Remember, we're looking for sticking points. Where is the market going to stick? Okay. So first things first, 1-to-1 equaled measured move. That's the first sticking point that you'd expect. But the second thing that you'd expect, if this is going to be a strong swing, the swing 3, remember, guys, needs to be bigger than the swing 1. So this swing needs to be smaller than this swing. Currently, that swing is exactly the same as the previous swing. So where would the next projection be for this? The 1272. 1272 is sat up here just under $32. So I would expect Chainlink to push up to the 1272. If this is going to be a strong bullish trend, the 1272 is going to be a sticking point. Then I'd expect a retracement. And if I was expecting a retracement, where would I be expecting a retracement to, guys? That's the low. If we get a rejection at the 1272, you expect a retracement at the 618. 618 coincides with build up a price action, rejection, 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 rejection. You would expect that to flip support. So that's sitting at $16.82. That's going to be a long time to play out, guys. This is the daily chart. If we push up to the 1272, and that's an if, that's showing one thing. It's showing that this is a stronger swing than swing 1. That's showing we're likely to have a swing 4, which is the pullback, and then a continuation for swing 5. So how would you be playing that, guys? You're looking for the continuation of swing 5. So there's a lot of conditions that need to be met here, guys. You need to firstly put the 1272 in. Secondly, you need to pull back to the 618. Then you'd be adding your conditions in. Make sure that the stochastics oversold at that point when you're at the 618. Add your trend line in. Once you've got the break, protect yourself below the low, shoot for the previous high. And it's as simple as that, guys. You can go to sleep at night. That's Link. Rune. Okay, Rune. Let's have a look. We can do the same here, guys. I mean, one thing you've got here, you've got a trend line. Remember, the trend's your friend till the bend at the end. These diagonal trend lines, I don't mind the diagonal trend lines, guys, but the horizontals have more weight behind them. The reason they have more weight behind them is when you've got a diagonal trend, you've got different levels of price action. For an example, here, $2.62. Here, $3.31. Here, $4.52. Here, $5.48. So what does that mean, guys? That means that the average is spread out along the trend line. What about when you've got a horizontal trend? Why do they carry more weight? They carry more weight because when people are looking at horizontal trends, they're adding the price at exactly the same level. So for example, this level here, which is the 382. So this 382 level, you can see, is a sticking point, and this is the horizontal trend. Once, twice, 3 times, 4 times, 5 times, 6 times, 7 times, 8 times. It was reacted 8 times because that was at $5.98, and everybody had their orders in at $5.98 because it's the same line, it's a horizontal, whereas these are different price levels. So what I'm saying is when you've got different price levels, that's smaller amounts at those levels. So that means less resistance to break through and less resistance to break through. But when you've got a horizontal, all eyes are on that level, which means all sell orders are on that level. And when all sell orders are on that level, there's a higher probability that you're going to get a reaction. Wow, what a rant. Right, okay, let's shoot through these now. We've got Say. Thing is with this, guys, this show has been pretty unsuccessful, to be honest with you, because everything's run and I'm waiting for a pullback. So what I'd like to do on the next video, I've done all of your call requests on this video, and all of your call requests are obviously call requests because they're pumped, they're in the news, That's what's making people gains. And they're the things that you've either got or you haven't got and that you're looking to get into. So what I'd like to do in next week's video is I'd like to be picking the altcoins, and I'd like to be looking at the things that are about to run rather than things that have run. So let me know if you want me to do that, guys. Right, we've got say. Where are we going to get a reaction on this? There's the high, fib. There's the low. Sticking points. We're looking for sticking points. Next sticking point is going to be 618. That's going to be the level to overcome. 618, you know, support, 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 resistance, resistance, resistance. That's going to be a sticking point. That's the horizontal. That's 78 cents. So price is likely to push up to this 78-cent level, rejected from the 618, some form of a pullback, back down here. Now, let's see what this looks like if we put our Fibonacci tools on here. I haven't done this before, so let's see if it plays out. So if it pushes up, there's the 618 retracement there. We're going to stick a fib from the swing low, looking for, from that 618 retracement, 0.618. Guys, look. Just look at this. Where's the 618 here? So this is hypothetical. We're forward looking in the market. We're saying we expect price to react at the 618 retracement from this previous swing high. If price reacts at that previous retracement, we're expecting sell orders to be here on this horizontal line. Once the sell orders are in there, there's more eyes on there. You expect a reaction. You expect a pullback. If you expect a pullback, where do you expect a pullback to? The 61.8. 61.8 is down here, guys. Look, 1, 2, 3, 4, 5, 6 times. 6 times rejected, RS flip. That's where you'd expect it. And if you expect it to come back to there, got your 618. What have you got, guys? That's going to be up here at the last rejection point. You've got your stops below the 618, limited amount of capital, 5.57 risk to reward. So it's all ifs, guys, ifs, ifs, ifs. If it happens, and then you can wait for the break, protect yourself below the low. So that's how you can play it, guys. This is all from a trading perspective. It was a trading show that you're asking for. It was a trading show that I'm giving you from an investment perspective. Go back and look at the Bullseye playlist. There's a full playlist with all of my buys from the portfolio that I showed you earlier on. Okay. This one doesn't look too bad. Myro. Okay, let's stick the diagonal on there. Let's stick the diagonal on there. I mean, one thing with the diagonals, I will say, guys, it works quite well with retail. When retail are in the market, the retailer looking for diagonals, the retailer looking for these type of breaks rather than the horizontal breaks. So this one's looking quite good. You can see we've put in a high, we've put in a new high, put in a higher low. And the one thing that we're about to do, guys, let me just zoom in on this. One thing we're about to do on this golden cross. Golden cross traffic light system. The green is about to start flipping upwards. And we know that, guys. This is a moving average. It's a moving average. It's not an indicator that you should use for trading. It's an indicator you should use to give yourself a thesis and then add weight to that by adding your other rules in there. So the 200 daily moving average, once you break and you close above the 200 daily moving average and we hold above the 200 daily moving average, that means that this is going to start fanning up 200. Then the 50 period moving average, which is the faster pace moving average, which reacts 4 times quicker than the 200, would cross up. That'd give you your golden cross. And then the second thing would be, of course, the 20 period moving average, which is the even faster period moving average, would move above the 50. And that'd give you your traffic light system in play. So this is looking quite good. Looks quite good, this one. So what's this on the daily chart? Have we come back and have we retested? Let's have a look, zoom in a bit. So we've come back, we've retested. Yeah, I mean, it's looking good, guys. This is going to be the rejection point here is 0.1462. I mean, accumulating between this range here isn't probably a bad idea, not financial advice. So accumulating small amounts during this range, small amounts during this range, small amounts during this range, knowing that this is your protection point, the 200 daily moving average and the 50 period moving average are going to be your protection point. So as they start pushing up, you expect price to start reacting from them. As they pull back, reacting from them. As they pull back, reacting from them. So use them as your friend and use them as your stop losses. As the moving average pushes it, you start putting in the higher lows. You can move your stop loss up into profit, move your stop loss up into profit till the trend reverses, and then you get stopped out in profit. Wow, look at this one. So we actually got this GRT trade. We got this GRT trade, but only up to 29 cents. It's actually ran all the way up to 35 cents. So how would you feel if you had a 3.41 risk to reward, and then you'd got your 3.1 risk to reward, you got stopped out at this level, and then price went to that level? Would you be happy that you'd got this much, or would you be unhappy that you never got this much? Ones on this channel, guys, are going to be happy that they got this much. It's not about shooting for the moon. It's not about getting all of the tops, because that's not going to happen, guys. You're not going to get the tops. It's about taking what the market gives you. And I was asked in one of the comments by a guy called Steve. Thanks for the comment, Steve, about whether I short the market. The reason why I'm not short in the market at the moment is because I'm following the trend, guys. The trend's the friend, and I continue with the trend. My strategies all continue with the trend, and I don't have any trend reversal strategies. As far as accumulating is concerned, during the build phase, they're all trend reversals, because you're building during an accumulated phase that's going sideways, and you're expecting something to reverse at some point. So they're reversal, guys, from a longer time frame horizon. From a shorter time frame horizon, it's different. So GRT, got that one at resistance. Now this is that strong resistance. You can expect a pullback. Look how high this swing was, guys. This is what Altseason does in just a few days. 173% on GRT. So overheated, it's at resistance. We know it's at resistance. Pullback. Are we going to get a shallow pullback to the 382? That's sitting at 26 cents. Or are we going to get a deeper pullback to the 618? All the way back down to the entry zone here. Get rid of that now. Let's play it out. All the way back to down to the entry zone here at the 618, which was coinciding with this massive buildup of previous price action. So if price pulls all the way back down here deeply to this 618, then that's going to act as strong support. Doesn't say that it's not going to say that it will, guys. You've had your golden cross here already. Green crossed underneath the yellow. Yellow started fanning upwards. You've got your traffic light system in play with the 20 period moving average absolutely flying. So I'm expecting a pullback on there. I'm not buying this resistance level, not a chance. UOS. This looks nice. You can see this is the shelf that we need to overcome. And that's the shelf that we got resistance from. 1, 2, 3, 4 touches. It's come back down, and that's exactly where we got a reaction from. Look, if you just zoom in here, guys. Let's zoom in here. You can see. So we talk about the extreme highs. Talk about the extreme highs of the day. That's your wick. So at some point, the bulls have pushed price action all the way up to 16,904 on Ultra. And then what have the bears done on the day here? The bears have pushed price action all the way back down here. Now, buyers and sellers, guys, buyers and sellers. What happens at this point here? There's no sellers, there's no sellers, no sellers. The sellers need to lay off until they've got a strong probability of having their turn. Their turn is going to be when more people are looking at the same thing, and they're all going to put their price orders in, their sell orders in at that point. That point is going to be this previous support shelf to flip resistance. It's exactly the same level, guys. And that's exactly where the bears push price down. So this is the level that we need to overcome in the short term. That level's sitting at 0.14857. It's likely going to be a bull pennant, guys. It's likely going to look like this. You're going to have a break to the upside, or you're going to break to the downside, and that's how you're going to get conviction as to what move you're going to get. If you break to the upside, you protect yourself below the low. If you break into the upside, you're protecting yourself below the low down here. If you break into the downside, you're protecting yourself below the high if you're shorting. If you're shorting, and I'm not shorting, guys, I'm not going against the trend, this is where price is likely to pull back. So let me give you a hypothetical example of something that I wouldn't do, and something that you tell me if this makes sense. So you've got a 24-hour market, and you've got a thesis that you're bullish overall. You're looking for bullish trades, but every bullish trade has got a pullback. Every time that you get a swing, you get a pullback. So does it make sense to go like this? You've got this swing here. You sell up here. So you've solved everything here. And then you're pulling back to the 200 daily moving average. Hypothetically, pulling back to the 200 daily moving average. You're short in here, and you're short in here. Loads of leverage, and you're shorting. And you get to this point here. And then you're going to long. and then you're going to put a continuation in, and you're going to long. You're going to get to this point here, and you're going to short this. And then you're going to get to this point here, and you're going to long this. Definitely not going to happen. It's definitely not going to happen. It's definitely not going to happen, guys. So your thesis is you're going to be out of the market. If you're trading, you're going to be out of the market a lot of the time. You're going to be waiting for conditions to be met, and you're going to give yourself the highest probability of a move. If you're going against the trend, you're not giving yourself the highest probability. So, unfortunately, if you've got this move, and you've taken profits at this level here, during this point here, out of the market, and at this point here, remember, guys, the bulls and the bears are looking at areas for buyers and sellers. They're looking for their turn for tug of war. The bears' turn for tug of war was here. This is where the bull and the bear fight happened. Not here, not here, not here, not here. So by not having anything, if you're selling here and not having anything for this whole swing here, which would be going against the trend, and waiting for this period here, that's giving you a higher probability. You're risking the least amount of capital, and then you're following the trend. So you're giving yourself even additional confluence that the move's going to go your way. Because ultimately, sometimes you get shallow retracements. Sometimes you're going to get this. Sometimes you're going to get this. All sorts of different scenarios can play out. So it's all about protecting yourself, and being out of the market is sometimes the best thing. Quite a lot of the time, it's the best thing. We've done this one already. Ultra MAGA. Not a chance. Not a chance, guys. Look at this swing here. Yeah, this is going to be a lesson. I don't know what this thing is. This is going to be a lesson to anyone. Look at this. Just look at this. This is how much money you can lose in crypto. So whoever's thought about getting into this Ultra MAGA or whatever it is, this has gone all the way to the top, right? That's 1,299. 129,777.37% move to the upside. Right, okay. During this point, everybody's interested. During this point, everybody's interested. So if you put $1,000 into this thing that everybody's talking about that's going to make you rich at this point here, this is just in a couple of days, guys. Whatever happened in the first day has got reversed in the second day. You lose 99.6% of everything that you own. Guys, understand what it is that you're getting into. So would I be buying that? I definitely wouldn't be buying that. And I definitely won't be buying that. Look at it. Does it mean that it can't go to the moon? It can go to the moon. Anything can go to the moon. There's probably a 0.0001% chance of it going to the moon, guys. It's all about probabilities. LCX is breaking out to the upside by the looks of it. You can play this, guys, by this is the extreme high. This is the resistance point. That's probably the resistance point because just don't know how much data this has got by. Let's have a look. Let's have a look. Right, okay. So what I'm going to do is fib from its swing high from here all the way to its swing low. Let's see if we've got any sticking points here. Right, okay, so we've got a reaction. We've got a reaction at this 0.5. So the 0.5 has been respected once, twice. 0.5 has been broken through at the moment, and the next area for this is going to be 0.4311. This is looking quite promising, actually, guys. This looks quite nice. We have got this resistance to contend with here. So once you've broken and closing above that, there's little resistance beyond that. So that's what that looks quite nice. And then you're going to have the protection. Let's give a scenario here, guys. So you break through. This is important. You break through. And the main thing is you need to take out this previous high. You can see that the bears have got control here. The push price below here, the push price below here, time and time again. The bulls are starting to regain control. But remember, it's all about the candle close at the end of the day. So if the candle closes above 0.3904, if the candle closes above that level today, that's showing that the bulls have got more conviction because the bears at every single time have pushed price below, push price below. It's the first time that the bulls have pushed price up. You'd expect this to be a support zone, previous resistance to act as support. So what that gives you is your tight protections and your continuation to the upside. You can shoot for the next level. Tara next. Don't know what any of these things are, guys. I've never heard of Tara. Tara's already had a pullback to the 382. It's pulled back to the 382. It got respected at 382. If we look at the 382, clues look left. Is there any build up of price action? We can push that here. You can see, yes, the is builds up a price action. So that was support, 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 resistance, resistance down here. You'd expect that to flip support if we did pull back. It's pulled back once. Is it going to pull back again? They're quite difficult to play, these ones, guys, because where you're going to be shooting for, you've got resistance here, you've got resistance here. If you zoom out on the weekly, I bet it looks a lot nicer. Investment time frame. This is it, guys. You look on a weekly time frame. This is a longer time horizon. It looks a lot better than what it does on the daily. You can see you've got the diagonal, you've got the break, probably got volume backed up by that. Just get some volume in there. Probably got volume backed up by the break. Yep, see, so you can see here, let me just zoom in on this. You can see volume starting to push up here. This is signaling strength. There's more buy orders, there's more buy orders. And when the volume's green, that's showing that there's more buy orders than sell orders. You can see as we're starting to push up here, price is starting to push up too. But one good thing that I like about this is we've managed to get the big candle with this little volume spike. When you get these big volume spikes here, which haven't happened yet, that potentially signal the big move for that for Tara. So how would I protect myself here? You can see we've already got a bit of a support base going on here. That was support, that was support. It'd come back through and it's holding the support now. You've got your 618, which is going to be even stronger support, sitting at 0.006976. That coincides with that resistance and that support. So you've got a lot of confluence going on at the 618 if it pulls back there. So how can you scale a position during something like this? Hypothetically, guys, you can scale your position. If price pulls back to this 382 and you think potentially this 382, it's going to flip support, but you want to be in the trade. And you want to put $50 in, for instance, into this spot trade. You're thinking, should I put it in for the $50 or should I wait for the 618? Because this is something I really want to be in, hypothetically. What you do is you scale your position. You've got your two key levels, your 382 and your 618. $25 at the 382. That means that you're in the game. If price pulls back to the 618, then that means $25. So if you've got a limit order at here and a limit order here, that means that if it pulls back to the 618, you average your position out around here. Not a bad entry. So averaging your position out gives you that hedge in the market. Now, what happens if this happens, which it will happen? What happens if this happens? You want to scale your position in, you want to put $50 in. Comes back down to the 382, you put your $25 in the 382, and then it runs like this. Don't get to put your $25 in here. What would that make you feel like? Would it make you feel like you want to put your $25 in this next higher low? Would it make you want to feel you want to put it in here, here, here? Because in your head, you've got $50 to allocate into a trade. Guys, in your head, if you can flip your mindset to say that $25 doesn't need to be in this trade, it can be in a different trade with the same setup where I've got a higher conviction, give myself a higher chance of success by not buying pumps and putting the second amount in there. Because if you put the second amount in there, you get the 382. The 382 is 0.009642, say 0.001 or 0.01. So say a penny. And then you're looking to scale your position down at the 618, but it doesn't come back down at the 618. It actually goes up. But you want to get your $50 in your position. So you come back up here and you buy at 0.015. What that does is scales your entry up that you've worked hard for down here. And when it pulls back, you've got a higher chance of your P&L being a negative on that trade at any given time. You don't want that. Messy charts, messy charts. Right, let's fly through these guys because it's taken me ages. Anybody that's still watching now, fair play, guys, because even I've got a short attention span, even I get bored. Right, Jasmine, wow. Guys, this is where we were talking about Jasmine on this channel, this build phase here. I wasn't just talking about it, I was talking about it video after video after video. That's sitting down there at like 0.00286. Jasmine's actually sitting at 5 cents now, so it's absolutely flew. So we've got resistance points here because it's just broken a new high. So what I can do is we can put a fib extension on there, find out what sticking points and how volatile this move is. To its high, previous high, back down to its low, and we're looking for one to one equal measure move to tell us It's a strong swing. An even stronger swing, the 1272. 1272 on Jasmy coin sitting at 0.06939. Now, this is where I think it's going to be the sticking point for Jasmy. I don't think it's going to be here. I think it's going to be here. So I'd expect Jasmy to pull up to the 1272. And remember, guys, exactly the same thing. Retracement this time. If we're going up to the 1272, then you're expecting a pullback. You're expecting a pullback to the 618 down here. As you're pulling back down to the 618 from here, holding the 618, you're going onto your stochastic RSI. That's going to come down to oversold as this holds and puts in a higher low. Got your trend line on there. Wait for the break. Risks down here. Rewards up here. Make sure you got a minimum of 2 to 1 risk to reward in this example. These are all waiting games, these ones, guys, but Jasmy's run. Something I hold, Jasmy. Right, okay, roll bit. I'll hold a few of these, actually. Right, roll bit. What do you want me to do with this, guys? This is the weekly, actually, going to the daily. What do you want me to do with that, guys? I haven't got a clue. This is roll bit against Tether on Bitmart. There's probably more data on Rollbit if I go into a decentralized, if I went on a DEX tools or something, but I haven't got a clue what to tell you on that. Could get a red candle, could get a green candle, who knows? Right, let's set the scale on this chart. Cadena. I have actually been asked for an update on Cadena. This is something we've been talking about on the channel time and time again. This accumulation phase, which lasted for 170 days, I said to you when this was going on during the accumulation phase, by buying at the bottom of these areas here, from an investment perspective, was the best possible opportunity to take advantage of the bull run. Once you've got the break and at the 200 moving average, you've got your traffic light system in play, you've got your green at the bottom, you've got your yellow in the middle, you've got your red at the top. Everything's fanning in the right direction, everything's going upwards, and then you've had a surge in price action. So those people that got those down there, that got those and decided to do that, you people are probably going to be in a positive P&L even after pullbacks. So how far is this likely to pull back to? You can see there's two swings here, guys. You've got this swing, got the pullback, got this swing. So if we measure those swings, then we can try and see where we're likely to get a reaction from. So from here to this one, it's a real shallow pullback. Hitting the 1-to-1, just about. You'd expect it to go up, grind up to the 1272 at least. See, that coincides with some strong resistance. That strong resistance goes all the way back to August 2022, reacted here, resistance. So you'd expect it to be resistance, and there's a chance it's going to pop through as support, guys, at some point. But what you usually expect is some kind of a call off, some kind of a pullback. So the stochastic can come back to oversold. What it's doing, guys, is coiling like a spring and coiling like a spring and coiling like a spring. And then once it's put in its higher low, bam, then it's got a chance of breaking through this strong resistance that was rejected here and rejected here. Huge waiting game, guys. Next week might be a bit better. This is a daily chart, so by next week, there should be a pullback, hopefully. So Flux. Not sure on this one, but you can see this previous buildup of support is acting as resistance. Let's get rid of those for now. Let's stick a fib from its high and see what kind of sticking points we're getting. To its low, 382. 382 we need to overcome. What you can do, look, guys, what you can do here, you can use these Fibonacci's. You've got a retracement tool from the swing high to the swing low, and you can see how these react. You can see how they react, guys. Look, it's come down, resistance, 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 flip support, fell through, acting as resistance here. So you can see these things work. And what you'll often see is between the Fibonacci numbers, you'll get reactions too, like this. 0.5 rejected, 0.5 rejected. So you'll often see that. So once you break through and pop your head and act this, and this acts as resistance, this 382 retracement from its previous high sitting at 91 cents. Sorry, video cut out then. Once that acts as support, the 382 acts as support, what you'll often see is price action move between these levels. And this can give you another edge in the market as far as scaling your positions in. So just as an example, if something replicated this, you can see it time and time again, guys. When you put your fib retracements on there, when you put your fib extension levels on there, watch how price reacts between the levels and it bounces between the levels. So you can take advantage from an accumulative perspective that once this acts as support, you can put in a small amount like $10 and $10. Expect this to be resistance. So that $10 is a move from there to the upside of 17%. So if you made a 17% move, you can even take your 17% off the table, accumulate that 17% down there, because ultimately, at one point, it's going to break through, do exactly the same thing again. And if you're selling your 17% and you're putting that 17% in there, what it's doing is it's compounding until it's wrong. And if it breaks through to the upside, you're not interested here, but at resistance, you might want to take a bit of your position off. And that bit of your position, you might want to accumulate that bit of your position down here. Rinse and repeat, guys. Trend's your friend till the bend at the end. When's the bend at the end? When you've taken out the higher low, trend reverses. And you want to be out with either the least amount of capital at risk or you want to be out in profit by trailing your stop losses. God, I've done so much talking today, guys. It's hurting my throat. Our weave trades played out already from the last video. That's gone. That's done. That's took profit. Okay, so retracement again from its high. What sticking points are we going to get? It's looking like it's probably going to be the 382 again. I've actually overcome the 382. So this is an example from the previous one, guys. So we've broken the 382. Let me zoom in. Broken the 382. What happened here? Broke, come back down. The bears have pushed price action all the way back down here, but at some point, the bulls have pushed price action back up, confirming this as a support level. So if we just take these off here, guys, look a bit closer, you can see the bulls have pushed price up, the bulls have pushed price up, the bulls have pushed price up, confirming this as a support level. So any kind of small allocations that you can get at these levels here, then compounding at these levels here, then compounding again here, compounding again here until you're wrong and it breaks through, or you're wrong and you're stopped out in profit. It's a good way of building a position. Because one way of building a position, guys, and something that I like to do is I like to start off, and this is leverage. I'm not going to start showing you leverage, but just one thing hypothetically that I like to do. So I like to build a leverage position using my levels. I'll go to a support point, either 618 usually, if it's a strong support, and if it's an RS flip, I'll put a small amount of my capital. Like if I was trading $100, $1,000, I put 5% in that, and I'd put it on a 2x or a 3x. I have that 2x and accumulate that 2x during a range, whether it's a bull flag, whether it's a bear flag, whether it's between Fibonacci support and resistance. I'll accumulate and I'll distribute little amounts and accumulate and distribute little amounts. What that allows for is if it breaks to the upside in my direction, it allows me to increase my leverage. And that by increasing my leverage, automatically my stop loss will go up. However, I would have made the profit from the previous 2x and the previous 3x by going through and scaling my position in, scaling my position in. And do you know what, guys? A lot of the time it doesn't play out. So probably out of every 5 times, it probably plays out 2, 3 times. But what it does is it stops you out at break even. So it's a free trade and it's a lot of effort. When it plays out, it's good. So that's how you can use these Fibonacci ranges. Miggles, what is Miggles? This looks nice, guys. So when I say it looks nice, does it mean buy now? No, it doesn't mean buy now. However, it looks like we can apply rules to this because look what's happened here. Look what's happened here, guys. I could tell even by just looking at this chart, but yeah, they hit the 618. So you've got your trend line on there. We've got the trend line on there. We've got the trend line on there. We have got a break of trend. We have had an oversold stochastic when it was at the 618. 618. See how it's supported once, twice, 3 times, confirming this level of support. That's exactly what we wanted. And as we were confirming this level of support, we wanted the oversold stochastic. So then you'll see price action move. It's all right if it starts moving up, guys. We want the oversold stochastic when it's at the 618. And you want the break, and then you want the minimum of 2 to 1 risk to reward. Now, this is a perfect example because there's 2 ways that you can play this. So 2 ways that you can play this. You've got You need a 2-to-1 risk to reward. You know what I'm like, guys? I like to shoot for the previous swing close, which is the close of the body. That's giving me confirmation because at this point here, the extreme highs, the bears have pushed price back down to the level where the body is. So I like to shoot for the body, but hypothetically, we were shooting for the top. That gives you your 2.22 risk to reward. That allows you to take that. However, if the break is volatile like this, sometimes it doesn't allow you to, but sometimes you will get a pullback. So if you get a pullback to this level here, what does this do to your risk to reward? If you get a pullback, it reduces your risk, it increases your reward, and then doesn't play out all the time, guys. But that's the second way that you can play something like that. It looks good to me, Mr. Miggles. As far as the short-term trade concerned, I'm happy to risk that amount of capital for that amount of gain. Take that trade 5.5 times, you win once, that means you break even. You take that trade 5.5 times, you win anytime more than once, and that means that you're profitable. C-Web next. This was requested this morning, actually. This looks nice. This is breaking out. You've got a reaction point here. You've got a shelf here that we're getting rejected from. Let me know in the comments what C-Web is, guys. I'm intrigued by this. Okay. Right, so you're expecting a reaction there. We've got the shelf here. We've got the shelf here. We've got rejected once, got rejected twice. You'd expect to get rejected the third time. What I'm going to do is stick a fib on here. I don't know where the high is, but let's have a look. From this high here. Right, so a fib from the high. See what sticking points that we've got, what points that we need to overcome. First one's going to be a 382. This 382 is going to be a major resistance on here. However, it's quite far away from where price action is now. It's sitting all the way at 0.01473. So that's a move from where price action is now, 84% to the upside. So it's going to be a tricky one to play this, guys, because this is a strong rejection point. You can tell that the bears, zoom in on this one, you can tell that the bears have got some form of control. However, we've still got 11 hours and 52 until the candle close. So potentially something like that could happen. And we can close above, and this can flip support. That could potentially happen. Or, even better, we can get a pullback from this swing. Let me just go into the 4 hour, guys. Let me just go into the 4 hour. Or we can get a pullback from this swing. So we're in the shorter time frame now. Each one of these candles is 4 hours. And I'm doing this because I can identify bull pennants, bear flags, bull flags in the shorter time frame. You can't identify it when you go into the daily. Look, guys, it's just a wick to the downside. But when you go into a shorter time frame, you can start taking advantage of trading patterns. So we're expecting this to come back down to this 382. And what's likely to happen is for it to form some kind of a bull pennant like this. And this would be ideal because these patterns are lovely to play, guys, because you're either doing one thing, breaking to the upside, or you're breaking to the downside. So it's giving you conviction. Once you've got a pull to the upside, that's confirming it's a bull flag. That's confirming that the bulls have got control. They've got the directional bias. And then there's a higher probability of that moving to the upside. So that's how you can play those bull flags, guys. That one does actually look nice. If we can break and if we can close above the 0.00886 level, I like the look of that one. And then I got a request for a stock as well, MicroStrategy, and a question about whether I think it's a good idea to be holding something like MicroStrategy. And to be honest with you, I don't hold MicroStrategy. But with my exit plan, guys, it's something that I'm looking to go into. Potentially not MicroStrategy because it's too intertwined with the crypto market. It's kind of like Bitcoin on leverage. So I wouldn't be going into something like MicroStrategy, but I'm going to be thinking outside of that and things like what's going to be scarce in supply but high in demand in 12 months' time during a time of what I think is going to be an economic downturn. I haven't got much confidence in the market, guys. I think that money printing's got to a level now, rather than the money printing going into goods, services, hospitals, schools, things that we need for everyday life. The money's going into paying borrowed debt to the rich. So I haven't got much confidence in the market in the next 12 months. And what I'm doing is trying to capitalize on assets that I think are going to be high in demand, low in supply, which would increase the value during that period. So I can take advantage of another bull run when everything else is going through a bear market through times of economic downturn. And that's just my prediction, guys. I don't know it's going to happen. That's just what I feel from the data that I'm looking at, from the studying that I'm doing. So If you did enjoy this video, guys, and if you are watching to the end, fair play to you. Thank you very much. Take care of yourself and goodbye from me.